Good afternoon and welcome to the webinar, Francophone Africa from Frontier to an Emerging Market Destination, brought to you by API Events, FrancoReal and Latitude 5, and proudly sponsored by Septem Group. My name is Kfir Ruzin, I'm the Managing Director of API Events, and we would like to thank you all for joining us today, and we look forward to some engaging discussions. Today's sessions will focus in on the commercial and residential sections of the Francophone African region and will take place over two panel sessions. There'll be a 5-minute break or intermission between the two discussions. Our first panel will look at the commercial, hotels, logistics, and alternative asset classes, and will be moderated by Ivan Cornet. This session will run for 90 minutes till about 2:30 p.m. We will then begin the session. We'll begin that session with a short presentation by Taslim Ngom, who's the Principal and CEO of Septem Group. The next session will begin shortly after, and we'll explore the residential and affordable housing sectors. This session will be moderated by Andrew Chimponda, CEO of Shelter Afrique and AUF Chairman. So thank you all for joining. I'll now hand over to Taslim Ngom. Before he gets going with his presentation, we'll be playing a short video. Thank you and enjoy.
Septem. It's multiple real estate projects developed, providing over 200,000 square meters over the last few years. It's a 5-fold growth story over the last 5 years. It's currently 30 ongoing projects in 3 countries in the Francophone West Africa sub-region. It's more than 20 years of experience combining local expertise and the mastery of 6 complementary professions. It's more than 170 direct employees, 500 indirect jobs, and 80 partners whose hearts beat to the rhythm of an emerging Africa who are imagining and delivering the future of Africa's built environments. It is projects that are innovative, beautiful, refined, functional, and durable. We are Septem, a corporate citizen and an aspiring continental organization, a group which lives its social and environmental responsibilities. Septem, a passion for challenges, an uncompromising stance for quality.
Good morning, all. Thank you, Kfir. Thank you for hosting this webinar. It's always a pleasure to be back since the first edition of this program. So over the next 5 minutes, we'll quickly go through a presentation of Septem and a quick overview of a couple of projects that we have going on before heading into the panel. We always like to share this slide first and this quote because it underpins everything we do, and for us it really reflects the reality of our markets. And this is from Paul Collier, who says that between now and 2050, Africa's urban population will triple. So 2/3 of Africa's urban space has yet to be built. And that's the vital struggle, getting that coming 2/3 better than the existing third. And in the context of COVID, that hasn't changed. Our populations keep growing and people keep flocking to the cities. So it's a real challenge for us in the real estate space to prepare for those cities, to welcome all that influx and be real engines of development and growth. Septem, we've been trying to do that for the past 23 years. We have integrated capabilities across the development value chain, going all the way from project structuring and financing all the way to design, build, marketing, and managing of real estate property, as well as asset management. We've got experience over those 23 years developing all sorts of asset classes. And in our own strategy, our core segments are high-end multifamily residential and Class A office, but we do opportunistically engage in other segments as well. With the impact of COVID, I mean, we had already started the trend, but with the impact of COVID, it accelerated. We really try to play now a leadership role in sustainable development, and we're systematically seeking a minimum of EDGE certification for all of our new projects. We're present in Francophone Africa. We're right now in Senegal, Ivory Coast, and Mali, but we have an active expansion plan going on throughout the rest of the region. And we engage beyond property development. Just because we're a builder, we develop our own projects, and other developers or other project sponsor projects, but we engage in other activities that for us complement the whole real estate sector. So first, working with funders and capital sources to provide better adapted financing mechanisms to boost the supply and enable the demand in the market. We also work on developing market intelligence platforms to support the sector, bring greater transparency, and allow capital and investors to see better through the dynamics. And last but not least, we engage with public sector and DFIs as well in helping shape the policies that are going to be conducive to proper development of our markets. I'll just fly over 3 of our projects that kind of illustrate a bit of what we do. This one we discussed last year at this conference. It's a Tour des Mamelles, so I'm giving you a little bit of an update. So it's a project that we consider as a new reference in Grade A assets in Dakar. It's over 40,000 square meters of office space, conference center, restaurant, and co-working spaces. We've been developing it for over a year now. We're seeing strong interest from future uptakers. The project was already pre-let 1/3 at the beginning, and we're seeing a growing list of prospective tenants, institutional mainly, with requests ranging from 400 square meters to over 1,000 square meters. And the dynamic is so positive that we're considering possible extension of this project into a mixed use with neighboring sites that are under review. We have a robust capital structure. It's a 58 million euro investment. The sponsor is putting in 35% of equity. It's a Caisse de dépôt et consignation du Sénégal, and the capital partners are the West African Development Bank, BOAD, and BOA Sénégal, which is a local commercial bank. Another project that we're doing, well, actually, just give you a bit of an update on the project on the construction site. So you can see here, COVID has had a 6 months impact on the timeline, and I guess during the panel we'll go into how where that came from. But the progress is still nicely going on, and we expect that by Q3 of 2022 we should be able to deliver the project. So another project is Ridwan Bao. This one is a residential development mid-end that's developed on a 10-hectare piece of land just outside of Dakar, where we're developing 450 housing units, single family and multifamily. It's an integrated community with all the services. We did all the primary infrastructure, and now are finalizing phase 1 of the houses. It's a 44 million euro investment, and our capital partners are again the West African Development Bank and BHS, who's the local bank financing the real estate sector, both on the supply and the demand side. Finally, this is one of our latest projects, and we're very proud to announce that we've entered into an option agreement with the diplomatic representation here in Senegal to develop housing for their representative, for their local representative. So it's a fairly interesting project. It's 47 units in a very highly secured complex. It's over 7,000 square meter plot of land. It's fully pre-let, pretty much 34 million euro investment, and we're right now in the process of securing capital partners for this project. So just wanted to give you this overview real quick. I guess I can hand it over now to Ivan for us to get into the panel. But I think these projects kind of illustrate a bit the fact that we're going from a frontier to an emerging market, because these assets are of a more mature quality than the ones that we've seen in the past. And that's just one portion of what's going on in the market. Ivan, over to you. You're on mute, my friend.
Sorry about that. I was just asking the panelists to turn on the camera, but everything's done. Good. Dear friends and colleagues, good afternoon. Welcome to this third edition of the FrancoReal. This time it's on a virtual mode. I think it was 2018 and 2019 that it was held physically in Dakar and Abidjan. Thank you, CAFE and API Events, for organizing this event, and a special thanks to CERTEM for sponsoring this event. In this first session, we'll cover the more traditional commercial real estate assets in the Francophone African countries. We'll talk about office, retail, or hospitality, but also what were once considered not so long ago alternative asset classes such as logistics. The second session, starting now in a bit more than an hour, will focus on residential and affordable housing. A few thoughts before we start the discussion with our panelists. I've been active on this continent for about 10 years now, and I've been waiting for almost that long to see a reasonable number of international quality assets being developed in Francophone Africa, as these were actually built in other sub-Saharan African markets. Over the last few years, we have seen several grade A assets being developed in established Francophone hubs. Taslim just introduced us to the Tour des Mamelles in Dakar. And we can also mention the Ivoire Trade Center in Abidjan, which has been developed by PFO Africa and just completed end of last year. There are also major developments in less conventional hubs, such as in Cameroon. We can talk about the Douala Grand Mall developed by Actis, and which was presented during the latest API Francophone Africa webinar in September last year. Aside from new developments and redevelopments, I think interestingly, we're also seeing movement on the capital market front, with a couple of weeks ago, the first real estate securitization for an amount of about 20 billion CFA francs. That's about 37 million US dollars, which was closed by Telium, one of the largest players in Francophone Africa. The question that we have to ask now is, do all these elements provide enough evidence of the region's progression from a frontier market to a growing emerging market, real estate markets, such as we see in Nigeria and Ghana? To discuss this and the Francophone Africa real estate market, let me introduce you to our reputable panelists today. First, and he has introduced himself already, it's Taslim Ngom, principal with CERTEM, active in Senegal and Côte d'Ivoire. Taslim, we can talk about Mali. I'm not sure Mali is the best place to be in for the moment, but I understand that you are also exploring other markets in Francophone Africa. Ram Lokam, principal with Casada. We all know Casada, of course, thanks to the Accor Invest transaction, one of the largest hospitality transactions in Africa, closed, I should mention, during the COVID-19 pandemic crisis. Casada acquired 8 Accor-operated hotels in Côte d'Ivoire, Senegal, and Cameroon. Geoffrey White, CEO Africa of Agility, focusing on developing integrated logistics infrastructure across the continent, including in Côte d'Ivoire. And last but not least, our financier of the day, Tola Akinanmi, head of real estate finance for West Africa with Standard Bank, which is, I believe, the only South African-based financial institution with a full banking license in Côte d'Ivoire. So we have our 4 panelists active throughout the Francophone region, 3 of them each representing, I think, a different asset class, and 1 active on the funding side. To get things started, and after Taslim's presentation, I think it would be best to ask each of the panelists for a brief introduction of its firm, and in particular its activities and development strategy for Francophone Sub-Saharan Africa. Maybe Taslim, maybe you're not the one to ask. Maybe I'm going to ask the other one. I think your presentation was self-explanatory, I think. So we can start with maybe we can start with Geoffrey, and then Tola and Ram.
Yeah, sure. Happy to do that. So I'm the CEO of Agility for Africa. Agility is a publicly listed company listed on the Dubai and Kuwait Stock Exchange. We do $5.6 billion in annual revenues, 26,000 employees, and we're a global logistics company. As a part of that logistics solution for our 65,000 global corporate customers, we develop and build logistics-related infrastructure. We're actually the largest owner, operator, and developer of warehousing across the Middle East and Africa by some scale. In Africa, we're building a network, and we've been doing this for 4 years. It's not a quick process, but the vision is to build a network of large international standard warehouse parks across all the main cities on the continent. And that ties in with the Continental Free Trade Zone, what we think is going to happen in regional trade, and enable the movement of goods to be much simpler and easier. Each park we build is a commitment of about $150 million, fully developed. But we buy the land, ideally about 500,000 square meters on the edge of major cities. We then develop a first phase, depending on what we think the market is, and then just keep adding to those phases as we go along. Warehousing per se doesn't sound like it's hugely sexy and attractive. But the reality is it's the fundamental infrastructure that enables foreign direct investment, SMEs to grow. So if you can build warehouse parks and make those readily available, you do two things. One is you reduce the capex required for other people to do business and to expand in Africa. And secondly, you significantly reduce the time it takes for a company to come into the African continent. So two examples of that. One is a big multinational that's with us. And they originally, when we first met them, they had a plan to invest $8 million to come into West Africa. Their plan was to buy a piece of land, build their own production facility, and they reckoned $8 million, 3 years, and all the risk around that, and then they would be in the West African market. They came into one of our ready-built warehouses, which is compliant with all their international standards from an environmental and a health and safety, security, power, etc. perspective. They were able to enter the African market. Instead of $8 million in 3 years, they were able to do it for $1 million, and we're in production and selling goods within 3 months. So for multinationals, what we're doing is a platform that just enables ease of doing business into the continent. For SMEs, we have a very specific SME program whereby SMEs pay 3 months deposit, sign a lease, and get given the keys and move in. So if you speak to most local companies, if they want to rent decent quality facilities, they either have to build it themselves with all the capex around that, or alternatively, they have to mortgage their children, their dog, their houses, and everything they've got, and sign some huge commitment. The reality is our SME program enables them to come into an environment where they can take more space as they need it. If they need less space, they can down trade. So it's all about flexibility, supporting SMEs, but getting them into an environment that they're proud to take their customers to and meets international standards. If you look at the projects we've done, our customer mix, interestingly, is about 50% storage distribution, so traditional logistics-related business, and 50% is packaging, processing, agri-processing, light manufacturing, added value, etc. And I think what we see is our sort of vision is providing this infrastructure across the whole of Africa that enables business to go. And we think that's aligned with the Continental Free Trade Zone, what's going on from a local manufacturing perspective, with the growth of e-commerce, you're probably all aware. I mean, e-commerce needs 4 times as much warehousing in market than traditional logistics. So we're making those fulfillment centers available. From a Franco-African perspective, our first project in Franco-Africa was in Côte d'Ivoire. We bought 500,000 square meters of land. The beauty there is the land you can buy, it's freehold, it's not leasehold. So that was one of the big attractions. And so the process of investment, change of use, planning, etc., is delightful in Francophone Africa because it's very structured and defined, which makes it much easier than the rest of Africa. We built an initial 18,000 square meters of warehousing as phase 1 in Abidjan at PK24. We got that wrong. We were we were too conservative on the market, so that was full before we'd actually finished it. Our concept is we build and we always have space available for customers to move into. So having done our first 18,000, and that's occupied by a mixture of multinational and local companies, we've just started the expansion of adding another 36,000 square meters to that facility, which will open in 2022. The expansion, and then we'll continue expanding that until that Abidjan project as a real estate project for Agility Warehouse Parks will end up with a fully built up area of around 250,000 square meters of warehousing. We're also looking at other locations, Senegal, Mali, to add to our network as the business proceeds.
Excellent, thank you. Tola, what's Standard Bank doing in Francophone West Africa?
Yeah, thank you very much. I think it would be nice to go last, given that we have a very good panel session here where you've got developers that circle or cover the key spectrum of logistics, hospitality, and then commercial real estate, which really, with the role that we play as Standard Bank, it's we entrench across the key markets, and for us that's West Africa, East Africa, and South and Central Africa. Yes, either to where we've grown and been active is within the rest of Africa, but we've established presence in Côte d'Ivoire as a key hub of Francophone Africa, and using that as a leverage point to scale up. So I do believe that we will continue to expand because from the bank's point of view, our key trust and drive is that Africa is our home, and then we drive its growth. So with Côte d'Ivoire being a key startup market, that is critical for us, and then we can then use that to leverage the other markets. In terms of that, I think we're learning quite a bit, and I've had a project done in DRC. DRC is also francophone, and there are lessons that will go through the panel session, and we'll share some of our learnings there, our experience, and how we're using that to then scale up and look to even further support clients in this key emerging and really attractive markets. There are learning points. I think some of the currency challenges that we've seen in the either to Ghana, Nigeria, in the Côte d'Ivoire market, you don't see that. So that itself lends you to better structures that allow you to then support clients with the right long-term financing that and stabilizes the asset. So I think we're growing our market share within that base and expanding the markets. We've, like I mentioned, we have that one project done in Kinshasa, which is a difficult market. Looking at a few leads in Côte d'Ivoire as well. I see a lot of interest in Senegal, and I just wish we have presence there. But I know we do have presence, but not yet an office. So I do think that that would happen. soon, and we'll be able to possibly support Teslim in some of the projects that you've highlighted. They're very interesting projects, I must say. I think I'll leave it at that, and we can share more thoughts as we go through the session.
Sure, Tola. Before we go to Ram, I absolutely, you last, because I wanted to talk about the which transaction. But Tola, quick question for you. I mean, obviously you have a banking license in Côte d'Ivoire, in Abidjan. Where are you working on? From where are you working on your real estate transactions? I mean, is it basically from Abidjan, and you're working throughout the African region, including Francophone African region, including Kinshasa, or how does it work internally at Standard Bank on the real estate side?
Yeah, thanks for that. I think for us, for real estate, it's important that we can finance and support projects in markets where we have presence. So it's important that we have a banking operation in that market, and it does take a while to, get the regulatory approvals, understand the market set up there. So it is important that, so we would typically finance a project in a market where, we've got operations. What I said as an example there is, it's a gradual process where we are growing. We're learning markets, we're expanding, and we've seen that happen. Even the Côte d'Ivoire establishment took a while, and some of the learning points and people that have worked in setting that up are already looking at newer markets such as Dakar, and those are being created. So we will support our clients within the key markets where you can scale. So, you wouldn't want to be in a market where it's one project and it's one project alone. You want a market where you can do much more for your clients. You can support your clients as they grow. So I think that's what drives it's the clients, is the market, and that's how we look to expand our support within the region.
Thank you, Tola. That's very clear. Ram, Quesada and a co-invest transaction. The floor is yours.
Thank you very much, and thank you, API, for putting together this event, and Ivan for moderating. So Quesada is a private equity fund. We raised in 2019. We raised about $500 million to invest in the hospitality sector in sub-Saharan Africa. That's our first fund dedicated to hospitality. We look at brownfield and greenfield projects, and I'll go a little bit as to how our strategy changed post-COVID, because obviously the fund was raised just before. We really believe in the growth story, and I think Teslim shared some numbers about what he sees in the African continent overall, some of the big numbers. But we really believe in that, and in particular, development of local and regional tourism, travel, business. So our focus, our core portfolio, if we look at the way we want to build it, is business-oriented hotels, focused on local regional travel more than international, and focused on business more than leisure, and focused on economy segment and mid-scale segment more than luxury. Those are the gaps that we've identified in the market today when we look at what is available out there. It's not to say that this demand is not filled today, and if you just look at global research reports about certain countries or certain cities, you would think that there are only like 4 hotels in Dakar or something like that. But that demand is being filled today. But there is still a gap in terms of what the offering is, and that's where we see the opportunity. And the other point I will add as well about where we see our value add as a platform. It's not only capital. We know capital is a big problem, and it's especially because markets can be volatile. We see that all the time. So having a strong investor base, a strong capital base is important. The other key area of focus for us is through our asset management and technical teams. They are in depth involved in the operations of the hotel. The hotels, we have a partnership with Accor to manage as an operator, but we also need to have, from our own team, oversight of what's happening and putting in place expertise from people who have worked in hospitality and in finance in Africa, with the real challenges on the ground, who know what it takes to get stuff done here, and they have decades of experience doing so. So that was an important part of the platform and an important part of why it was built this way with the scale, because we really want to be able to make a difference in the investments that we do. The third leg of all this is when we talk about ESG or impact. That is a word that's branded alongside for many reasons, and sometimes just more for CSR opportunities than actual change. But what we've found, again, through our experience and through what we've seen in the market, is that projects like these do two things: one on the real estate basis itself, and two on the human capital. On the real estate basis itself, the ROI of many of these projects is very high, and I'm sure when Sir Tam and Taslim talks about edge, those are some of the things that we do as well. We look at what does it take to implement such a capital outlay, and what is the return on investment for that? And it's just very simple financial game, and I think we can see that it adds a lot of value to your investment, to your returns. The challenge is the initial capital outlay is high, so it's not easily accessible today. The second is on the human capital. I think more than anything, and this is something that that was mentioned also earlier, the human capital we have to build in country. We obviously operate across many markets and many regions, but we spend a tremendous amount of time in training, in growing the team, in bringing them the resources, the knowledge to grow within our portfolio of hotels. And you cannot replace that local knowledge, that local feel, that local know-how with just applying a broad base, bringing in international staff. You have to sort of grow and train, and you can see a lot of value, because then you have people who are very committed to the platform, very committed to their company, and in times of crisis, like we are going certainly through today with the pandemic, you find a lot more loyalty and a lot more strength, resilience of the organization already built in.
Perfect. Thank you very much. I think you've touched on several aspects that we can raise a little bit further with the panelists. But I think in the meantime, for attendees to have a better understanding of the Francophone market, I suggest we go over some of the asset classes operations, and also look at the impact of COVID-19. I think we hopefully, fingers crossed, at the end of it, the impact of COVID-19 on the market development. And I want to see that and to compare it with the other sub-Saharan African countries. Maybe Taslim, you can start on the you have a good knowledge of the traditional asset class in Abidjan and in Dakar. Maybe we can start with you on the office, possibly retail side. What do you think?
Thanks, Ivan. Yeah, it's a bit difficult to do the comparison, because one of the impacts of COVID is you haven't been able to move around that much, right?
Yeah.
But as far as we can tell from a Senegal point of view, if you look at it from an overall perspective, it just slowed down the market development. Like I said earlier, the underlying trends have not shifted; they're still there. But the development of the market is slowed down to a certain extent, and you can look at it from two different perspectives. You talked about operations, but even assets that are in planning, in the planning phase, I think most of those got halted and reanalyzed, because I think that the pandemic put into focus things that we didn't probably pay enough attention to before. It was mentioned that sustainability was one thing, resilience is one thing. If you look at the the profile of usage as well. With the different conditions that your assets have to have so that it can be safe. All these other things have led to actually redesigning certain projects and rethinking about potentially their capital structure. That's for the projects that were in the planning phase. For those that were already in execution, being in development, and I'll get to operations last. Obviously you have an impact on your timeline of delivery because less man hours. They called it how they call it here, national emergency or whatnot. So you have less hours, less people to put on projects, and for anything that connects to global supply chains as well, there was a significant impact. So you slow down the delivery of the rolling out of assets that were in the execution or building phase. From an operations point of view, our portfolio is made up of multinationals or diplomatic representations currently in our portfolio. So you see some of that being eroded because a lot of people ended up going back home. But overall, it was kind of robust. It kind of held to an acceptable level so that it still made sense. So that's what I can say about Dakar. I mean, since things have softened up a bit, you see people are restarting the engines. You look everywhere, development is ongoing, and you have more and more international players that are coming in as well. Senegal just so happens to be a couple years away from first oil drop. So there's that underlying dynamic that's really happening that's boosting the sector. So again, I've just started traveling again to our other markets recently. I'm very excited about what I'm seeing in Abidjan. I'm very excited about what I'm seeing in Cotonou, where I just came from. So I'd say that the underlying trends didn't change. There was a slowdown of the development of the markets. Now that we're getting out, as you're saying, hopefully of the crisis, all engines are turning, and I think it's going to be very conducive to interesting dynamic moving forward.
Yeah, just to build, Taslim, just to build on that, when you're talking to international operators, one of the main issues they have is that they're unable to find grade A offices or assets in these countries. Do you see some kind of changes in this respect? I mean, that's the idea of the webinar we're in for the moment. And do you see some kind of pressure on the rentals?
Listen, this is a very interesting question. I think a lot of the local, the users of real estate that are from the international markets, when they come, like you said, it's difficult to find assets that meet their criteria. I think we talked about it with agility. So you're seeing more and more those folks coming in saying, listen, we want to come in early in the process and say, can we identify a developer with whom we can work, a piece of property that's interesting to us, and work on a set of criteria that are to be met within a certain timeline, and we guarantee you the uptake of your asset down the road after that timeline is done. And we're seeing a lot of that. So we talked about a diplomatic representation earlier. We've had an international education institution as well that came and proposed the same to us. Another multinational in the engineering space. We've have hotel brands as well, and asking for the same thing. So you're seeing that it's not pressure per se. It's saying, we will get involved earlier in the process. We know that our deployment timeline is, 1 year out, 2 years out. Hey, can you come up with an asset that meets these criteria, and we'll guarantee you the uptake. Other than that, the local demand is so high that didn't really change much. Like I said, a softening up a bit of the rents because some people went away, but everybody's coming back. So we're pretty much in a good shape, I'd say.
Okay, that's very clear. Thank you very much, Taslim. Jeffrey, needless to say, when you're talking to investors, logistics is the darling of investors for the moment. Can you maybe expand a little bit on what the market looks like? I mean, you have an operation already in Côte d'Ivoire. You're looking at other which is expanding actually, and you're looking at other markets. I mean, what's your position in this particular market, and what's the warehousing or the logistic market in Francophone Africa?
So we have 5 projects currently, and sort of another 5 that are in the pipeline coming along. So on the sort of last 12 months basis, the ones that were in development were definitely slowed down. The ones, and it took longer to deliver. International customers typically don't want to sign a lease with you until they've walked around the building and done the health and safety checks and etc. So that sort of slowed down with the lack of traveling. But we think the positive side, if there can be one coming out of the pandemic, is the trends that we'd really identified as 10, 15-year trends that we thought, okay, we've got a 20-year business plan, and in 20-year time, these will be really relevant, have all been fast-tracked. So digitalization and everything around e-commerce has had probably done 5 years of growth within the 12 months of the pandemic. So if I look at the number of people that are now looking for fulfillment centers and last mile delivery, etc., we had identified that as one of our sort of long-term trend markets. It's arrived now, and there's demand, and very tangible demand currently. Likewise, around local manufacturing. I mean, we think as Africa opens up with the continental free trade zone, as the regions start trading within each other, that's a huge boost for manufacturing. And I think the pandemic, again, has stimulated far more focus from governments and the private sector to actually focus on whether it be PPE or a far wider range of capabilities to actually have their own manufacturing and do it within Africa. So I think if I look at our sort of 20-year business plan, what we've had is 2 or 3 of our long-term trends have actually been sort of kick-started in a really immense way, much quicker than we had expected, which just makes us more bullish about getting on and developing more.
Excellent. Ram, let's talk about hospitality. Obviously, a very different story from logistics. Hospitality has been, I would say, badly hit by the pandemic. Quesada invested in 8 hotels in Francophone Africa, which is not the hottest market in general. If you look overall at the real estate market in Africa, I mean, what did Quesada see that other people didn't in Francophone Africa and through this market, through this transaction in Francophone Africa?
No, absolutely, yeah. If logistics is, as Jeffrey mentioned, if logistics is the darling today, hospitality is probably on the complete opposite spectrum. so I'll try to match his enthusiasm. But no, we are hospitality investors. We're very bullish about the sector in general. COVID has made us think hard and look hard about our thesis. Why we're investing in the region? What are we investing in? How do we invest in? And I think across all of these parts of our thesis, we have had to take a really hard look and a drastic change in certain areas of focus. So, for example, financing, definitely going onto the more conservative side. Greenfield versus brownfield, constructing from scratch effectively. That becomes a very small portion of our strategy, versus before it would have been maybe 50-50. And also operational buffer, because when you're looking at the coring assets today, well, COVID is still ongoing. The pandemic is still ongoing. You don't know when things will recover. We all get a sense that things will recover. We can see the vaccines happening. We can see rollout happening in different markets. And if the US and Europe is an indication, you see a lot of almost a roaring back of the economy. So you can expect something like that to happen within the Francophone African market as the vaccine availability increases. What we've seen, what was attractive in the acquisition that we've done is we spent a large part of last year just reevaluating this strategy, exactly to be ready for the kind of opportunity that came about to acquire these 1,600 rooms. And the trends that we talked about earlier, the switch to local and regional or domestic travel and domestic business, the pandemic has accelerated the trend. On top of all the other technological trends that we know, that has also really accelerated that and brought a lot more people to the fore than that would not necessarily, spend and expand as much as used to. So there is still a reliance, obviously, on international travel, especially from France. And that is impacting our P&L, but hopefully that will improve as time goes on. But our thesis was, well, you have a certain amount of local and regional travel, and you see it going as a bigger and bigger share. And that as that share increases, it also increases the stability and reduces the volatility and the risk of the investment. And that's one of the big areas that we saw as potential for this investment. The idea that this once you get over the hump, you should be able to actually create a better quality earnings or better quality cash flow. The other thing is very simply just an investment in these properties. I think we talked a lot about edge and sustainability and green, but those are real things in markets where utility costs usually are a few percentage points of your revenues. You're able to reduce that significantly by actually putting the capital. And I think one thing that really differentiates us from the previous owners is that we are based on the continent. We are looking at investing and focusing solely on here. So when we look at a capital outlay of a couple million euros, a couple billion CFA francs into any of these projects, whether you say wastewater treatment, or solar panel, or whatnot, we will be here to see the ROI. The ROI might take, some projects takes 2 years, some projects take 5 or 10 years, but we are here and we will see the returns of that project, in the P&L, and that makes a big difference. Now, all this to say that the pandemic is still very hard. So one thing we definitely built into our business plan is a lot of buffer, a lot of earnings volatility for the next 12, 24 months, and we cannot underestimate how difficult things are or can be. Even the first 6 months were, very truthfully speaking, were difficult. We ended the acquisition in December, and from Jan to April, things were skitty. What really helped, actually, the business to be performing is the food and beverage, the restaurants, which has attracted a lot of domestic guests coming in and sort of like, so you've had to adapt your strategy. You have to be a little bit more flexible and agile in how you react, and that has helped the business sort of stay I won't say better than planned, but at least as per plan. So you have to be very careful of this volatility in the short term, but find ways in the longer term to sort of bring that volatility and risk down.
Thanks, Ram. I'm going to push a little bit on what you just said. I mean, the trends you were talking about, travel restriction, investment criteria. I mean, all these can be applied to, I think, every market in Africa. What made it? Why Casada actually invested in these Francophone countries rather than Nigeria or Mauritius or any more mature market, I would say?
I think the macro of these Francophone countries and a lot of many of the Francophone countries, putting aside what's happening in the Sahel right now, the macro and the political environment is a fairly stable one. I think the political environment we know in most countries is always a bit challenging. In Ivory Coast, elections are sometimes difficult. Senegal, we've seen some issues. Cameroon, where we also invested, they have their own terrorism issues in the north. But frankly, you see also issues in other countries. At least here, I think in Europe and the US. Here, I think you are starting to see more normalization, things improving on that front, and in Francophone Africa, it's fairly stable. And the other important point, which I find that sometimes, and I'm glad we're doing this in English, because I find sometimes that Anglophone colleagues across markets forget it, is the stability of the currency. The peg to the euro, it adds a meaningful risk mitigating factor to investing in the region. and that cannot be that cannot be. It's not negligible. It's an important factor. There's obviously risk as well. We know that there was a devaluation in the 90s, so things can happen and go wrong. So it's not to be completely blind and just assume it's risk free, but it does bring a certain amount of fiscal responsibility and low inflation and certainty of capital, which as a foreign direct investor in our case is important and makes a difference.
Okay, excellent. Thank you, Ram, for this clarification. It's very helpful. Tola, talking about funding, I think you're the man of the day because everybody's looking all the time at funding. While I think project can be difficult to identify it also, but that's another issue. But what has changed recently, over the last year or so, in your funding requirements in Francophone Africa? And what type of project did you finance recently? What were the conditions?
Yeah, I think I'll try and speak broadly because funding terms and structures are not alien to a region.
Of course,
it's broad parameters, and then you structure for the particular asset client certain nuances that creates that comfort. I think like I mentioned, we closed a deal recently. So COVID taught us quite a bit, and it's really understanding your clients, understanding the assets, the location, the real dynamics that support these assets, be it retail, be it offices. And what we all found is that the impact, differs across markets. It's not the same impact. So that's why it's important not to have a fixed mind or fixed approach in trying to, it's really client focused, it's asset focused, it's country focused, and bringing all that in, Ram talked about the macro. So it differs from country to country. So I think that's the view that we've taken. As an institution, you have thresholds. You're looking at the asset classes, and I love this span of hospitality, logistics, and I think there are two extremes. Which Ram said, one's the darling, and the other is the flavor of the month. And CRE just sits right in the middle there. But I think spot on that they all create value for our continent, for our region, for the Francophone region. So I haven't shared what I haven't shared the preamble there in terms of this retail project, because if I think about it, retail is quite difficult to finance now. But even in the current market, we're able to support that project. And we're able to close the deal just last quarter, and I can be specific. This is in Lubumbashi, which is the third largest city in the DRC. So it's you drive the solutions around client needs and around what really then creates value. I think another important piece is sustainable impact, which is a critical element as well for finance, and ensuring that while you support clients, while you support creation of this asset, the real value to the economy, infrastructure, all those elements also coming. So that is becoming a resonating factor that also shapes how we're able to fund projects. What we're seeing is that there will be opportunity across the full value chain. So in terms of what one has seen recently, it's owner-occupier type clients looking to develop their office needs. But residential is also becoming critical. Retail is not as much. I do think that in terms of logistics, it remains a darling. It will scale up. And one is so you're seeing certain clients expanding their own warehousing needs, or having a combination of office, the lead office to enhance what they currently have, and then a warehouse to support their operations. And it's across the real sector, so pharmaceutical companies, consumer companies, any entity that's dealing with goods and looking to extend that across markets, and not just a particular market, but across countries within the West African region, is definitely looking towards that. So I think for the parameters aren't changed, but they are focused. They are client centric. They are country specific. They are asset focused. So I think those are the key parameters. Yeah, from a debt point of view, the critical elements still remain. You want to support good sponsors, financial strength, but leverage levels would remain the same. So we're not saying we overly conservative. It's the same terms. Looking for support structures, and really trying to do the best deals, the right deals, and supporting key clients. So I think I will leave it at that point. But yes, we're really looking to do more and to scale up. Thank you.
Tola, thank you very much, Tola. I mean, in terms of asset classes, you mentioned retail, you mentioned office. We see, and logistics, we see a real trend to what we call alternative asset classes. Talking about data center, we're talking about hospitality, or not hospitality, but healthcare, education. I mean,
yes.
Are you also looking at these kind of projects, and do you find bankable projects in those particular sub-asset classes?
Yeah, thanks. I think that's such a spot-on question. So I think with what COVID has, with the lessons from COVID, I think it's quite clear. And our markets have evolved, and what we were what the key focus on from the developer's point of view were the traditional asset classes, being offices and retail. But maybe with COVID that is a blessing. We've seen Geoffrey pushing the logistic part, and with COVID and with developers as well, not with the traditional offices being where they are now, retail being where they are. You might do one or two things there, but where there is skill is this other value add assets, which wouldn't have been your typical focus. So I think we've classified it in three broad themes: technology, and data center is a subset of that. We've also themed the medical, healthcare, which would include hospitals, clinics, pharmacies, and the likes. And then the third spectrum is then educational facilities, which will include schools, universities, and so I think I won't say it's a aggressive drive or a bullish fund, but clearly the strategy is being crafted in terms of supporting assets within that within those buckets that I've just explained. I haven't seen a deal in the Francophone space yet, but from our own strategy, Africa, if that is a thing that we're moving towards and we're beginning to explore. There are one or two projects that we are already looking at to finance in other markets, especially within the data center space. But yes, as an institution, we support real estate. We would support our key clients in terms of value that they're creating within the markets. And if with the direction being that one starts to look at those alternative asset classes, student housing is another part. So student housing will be grouped under educational facilities. But yes, we are taking a keen interest, and you won't learn the curve. You won't jump blindly. You'll have to understand the dynamics, the demand and supply, understand your risk acceptance criteria, and evolve solutions to create value within those within that space and as well.
Okay, thank you, Tola. We've had, I think, now a good overview of the actual market. What I want to focus now is the actual challenges and specificities of developing and investing in Francophone Africa. Ram, you already mentioned in terms of risk. We talked about a little bit about the political risk. You mentioned the advantage of the currency. What I would like to talk about is one difficult aspect, and I think it's something very close to Taslim's heart, is the depth of the market, transparency, and the challenges to actually gather data. This was one of the main difficulties of less mature markets. How do you see, Taslim, how do you see that evolving? We know that when you look at the Transparency Index published every couple of years by JL, usually Francophone Africa is really on the bottom of the ranking. Are we going to be better off, I mean, in a few years? How do you see things evolving?
Thanks, Ivan. Yeah, something very dear to our hearts in terms of developing really those market intelligence platforms that are going to really unlock the full potential of the market. We're looking at it very hard. The encouraging thing is we actually starting to see players getting into that space. So I can give at least one example of one startup that launched recently that really created a platform where supply and demand meets, and they've added financing as well to that. So as more of those platforms start getting online and start helping to structure the market, because all the structuring elements, being the brokers or anything else, are mostly informal to this date. But creating platforms that actually collect and aggregate a lot of information on both sides is gonna start helping. I think more can be done. There's no other answer than, because a full ecosystem, everybody has to play their role, right? To a certain extent, when you see that there's gaps and the cost of extending your scope of services or what you do to certain of those holes is not too high, then you can engage in that. But everybody's structured to do something very well, and that's another problem in our markets. For instance, what I call long-term holders of patient capital are not playing their role because they're trying to get into development rather than coming in at the back end of projects. But the short answer to what you're saying is we need a new brand of new breed of actors to come into the space and fill it. I mean, I find it very unfortunate that we don't have the equivalent of a Zillow, for instance, here in Francophone Africa, and it's something that's not that complicated to do. I can say that for us, we're making progress in terms of trying to build that. We've had one of the I'm not going to tell which one, but one of the big fours that is interested in doing this with us. We're just going to try to take time to do it. Again, it's not very complicated. Our markets have processes that are very clear, as mentioned earlier. It's just a matter of plugging into those processes and putting a platform that supports that collects data. I think we're going to get there. It's not going to be in a very short term, but at least I'm seeing encouraging steps towards that.
Excellent, thank you. Jeffrey, another challenge that you touch upon also in your presentation is the challenges to actually find expertise locally and skilled workers. Is this also evolving in the right direction, or are you basically still finding it very difficult to, especially to develop your assets to find this type of workforce in the countries you're working in, especially in Francophone Africa, of course?
So I mean, it's a question of working with the contractors. So as an operation, we're not a massive employer. We stimulate an awful lot of employment. We always take all our customers to meet the local community, and where possible, employ locally. As an operation, a Pan-African operation, we have 100% of our African operations are managed by Africans. So in Côte d'Ivoire, it's Fanta Tangara, who's done a great job. The reality is, in each facility we build, we create training facilities. So either our customers can have access to use those, or we run that as our sort of CSR program. But I think when I speak to our customers who have bigger sort of HR requirements than we do, they struggle finding quality of staff. So the more, and interestingly, when the biggest one we've had is in Ghana, which is our first project, so that's recruited the most graduates. And interestingly, when we spoke to our customers, they said, don't do higher education, do basic IT skills, forklift driving, electricians, plumbers. Those are the skill bases that we can't find within our operation. So we have a vocational training facility there. We've just started one in Abidjan. I think the contractor process is difficult for us. Our average build isn't hundreds of millions of dollars. It's somewhere between sort of 20 and 50 million. So your big contractors find it hard to compete on that basis with your local contractors. You end up going generally with sort of grade A local contractors, and then you've got an issue around health and safety and policies on site, etc. So we spend a huge amount of time mentoring them and working with them. And for example, if I look at the contractor that built for us in Ghana, who's now done 4 phases, by the 4th phase, they understood that they can't pick somebody up in a front-end loader to fix a light, and everybody has to wear HSE equipment and hard hats, etc. When they first pitched up in day 1, I mean, they all arrived in flip-flops. So you've really, it's up to you to bring that culture onto the site and say, guys, this is what we're expecting. More importantly, this is what our customers are expecting. If Nestle or Volkswagen or Cummins or some of our big customers come onto the site, they've got to see those international standards. That's the USP of what we're actually delivering. We deliver that we've got proper waste management, power stays on, you're in a secure, clean, safe, landscaped environment that is pleasant to work in. Part of that is bringing in HR policies that match those standards.
No, absolutely. Taslim, I'm just going to go back to you really quickly before we talk to the other panelists. In terms of service providers, and I'm thinking more about property managers and facility managers. I would say most, not all, but most of the international players who are present in Nigeria, Ghana, South Africa, Kenya, and so on are not physically present in our Francophone countries. How do you see this developing? Do you think those guys are basically of the attractiveness of the market going to come to this market, or local players are going to get that expertise? How do you see it playing in Senegal, for example?
Right. That's a great question. You know, like you say, certain skill sets or certain capabilities are just not present. I mean, facility management, you hit the nail right on the head. It's one of the things. That's why assets here that might be all nice and shiny when they come out, but come a couple of years down the road,
Exactly.
you know, you're kind of like, what is this? And I think, like was just said, a lot of it is going to be driven by, you know, demand from the customers, the end users. And I think as our markets mature, and as the crop of users and tenants get more sophisticated with higher requirements, we talked about it earlier with the diplomatic representations and such, you know, that's going to drive necessarily demand for those services. And we're seeing it. Like I said earlier, when you see a gap, when the cost to extend into that gap is not too high and you're not too far from the core skill set, you can engage in that. And for us, for instance, we've done property management for years, but at a smaller scale. now, we're talking about assets that are going to be bigger with the, more sophisticated set of tenants. We're going to take that extra step and go and upskill to get there. And that goes, you got to recognize as well that you cannot do it by yourself. You got to partner up with international technical service providers in order to help you get there. And that's what we engage in. It's funny, I was laughing earlier about the whole story about the, lifting the front loader. I'll use our example because, like I said, we're a service provider. A few years down the road, when we started having projects that were financed by DFIs, they put on us a certain set of QHAC criteria that we've developed since then. So we're going to keep maturing in that matter. I think you'll see more international players. We've seen Francophone players coming. We've seen from North Africa players that are coming in to fill some of the space. And you've seen as well some local established players that are trying to upskill to get there. So it's going to be a combination of those things. But as the demand expects it and requires it, those services are going to necessarily get developed. I'm talking about, for instance, the oil and gas sector. I mean, it's crazy. And all these facilities that are being built, if you don't meet a certain set, all of us are getting certified now. If you don't meet a minimum set of criteria requirements, you're not going to touch that business. That's, again, the demand is going to drive the need for those services to get more mature, and you have a mix of local guys and foreigners that are going to come to provide those services.
Okay, thank you very much. Ram, just to continue on that particular aspect, and again, you raised it in some of your intervention. Green buildings, obviously, it's a massive trend that we see in Europe or in the US, maybe less so in Africa, but I think we clearly see it's coming, especially with the EDGE certification, and which I understand is also developing its certification to a more refit kind of buildings. I mean, is that a way, on the hospitality side, is that a way basically for hoteliers to position themselves toward international clientele, and is there a need to invest capex to transform or to redevelop hotels towards this kind of more sustainable way?
Yeah, I would say I will go even further. It's more than a need.
Okay.
It's almost, if you don't do it today, you are falling behind. The customer expectations and not only the international customers, but you also have domestic regional customers that expect, when they come into your hotel, they expect that you meet a certain criteria, right? And it can, and you'd be surprised by the number of guests who would ask, like, oh, do you have a wastewater treatment plant on site? There's just a lot of curiosity about this, and a lot of pride when you can demonstrate that you have effectively done some of these. So it's an integral part of our strategy. We at Casada have a commitment that all our hotels within 3 years of acquisition, we will get them EDGE certified. And frankly speaking, with the pandemic still kind of like, going strong in some places, we can probably do that sooner because we can put in place more capex towards these programs. And I think it's an important one, and it touches upon what Jeffrey and Taslim spoke about here. It's a virtuous cycle. You have customers that request it more, and eventually you have suppliers and service providers that can understand how to deliver it, and that sort of like builds upon itself. And it's taken quite some time to get done in the US and in Europe, but here I think you will see the trend going that way very fast. And what will really help is also everything to do around sustainable in finance. Like we've already seen some banks offer lower interest rate when the project or when the capex is being spent specifically for green projects. And today all these terms are all very loose, right? We're talking green sounds like a good word. When you build new, green is very green. When you're refitting a building, green is a bit less green. But in any case, it is just the first step of hopefully a cycle that will only accelerate. And banks wouldn't do this if they didn't think there was a real return on investment also for this. So it really comes across the cycle and across the value chain, from customers all the way to suppliers. Everybody's expectations are going up. Everybody starts seeing the value, and you will hit an inflection point sooner rather than later, where it will. If you don't have it, even local and regional customers, the same way Jeffrey talked about international customers expecting a certain amount of fire, life safety, hygiene. The same thing will come from local demand as well.
Okay, excellent. Tola, you know what I'm going to ask you. I mean, are you looking at green buildings? Are you going to offer Quesada lower interest rates to put capex in their newly acquired hotels?
Yeah, I think the simple answer to that is yes. And from a financial institution point of view, we also don't utilize just depositors' funds. You seek capital from other, institutional funds, from TFIs. So there are pools of capital that would support these kinds of projects that are sustainable led, and they come at those kind of additional premium pricing to just galvanize support and to get buy-in and ensure that everyone is driven within that line. So it's a critical thing for us. We're looking at it it wasn't the case in the past project, but any project that one is looking to do now, it's important that you demonstrate, those principles. It is critical. It is topical, and yes, there will naturally be some premium or some advantage if a project really embraces those principles. So yes.
Yeah. Okay, perfect. Okay, thank you, Tola. Tola, we're getting near to the end of this session, but I wanted to ask you another question about funding and more on the debt side. Obviously, you are in a specific situation because you SA based, but you have a banking license, so you're able to fund CFA francs. How do you compete with local banks and regional banks? I mean, there are some which are very strong. Some have been recently acquired by Moroccan banks. They're truly regional banks. I mean, how do you position yourself in this market?
All right, thanks for that. And I think we're seeing that live in certain projects that we're looking at now. But I think the first thing is that we're a local bank in those markets. Yes, we've got a parent, that's offshore. But I think the ability to leverage on that it's key, and that should give us the competitive edge in the market. I think what the advantage that also gives you is in terms of balance sheet, being able to deploy not just because there are SOL, that single obligor limits constraint that you might have within the country. So depending on the size of the local bank, you have a maximum lend, which is driven by the central bank regulatory position. So you then have the advantage of then leaning on the group, the parent, to also be able to provide that to the extent that ceiling is standard. So I think that's a competitive advantage. I do think, given our breadth and what we've seen on the continent, the lessons, the experience across various assets classes, we're able to also bring those skill set, those transactional structural experiences. And I'll simply speak about one. I mean, it was in the news recently, a portfolio lent to a key client across different markets. You can deploy that solution, and we're looking to deploy same to to a client in a specific country, just because you've got that experience, and you're able to, and you can necessarily morph it or structure it within their own nuance, but the principle remains the same. So, and I do think those are the competitive edge that we bring. And yeah, I think the market is big enough for everyone. We know who our clients are, so we're not also focused on just projects. We're working with the clients, understanding them, and trying to go on that journey, grow them. And it's not just the project, but the project there's the development side, there's the operational element, and we do know that markets do turn, and you then need to be there to support the assets stabilize. Post stabilization, there's exits, and as an institution that's able to help you list the property via equity market listing, or when those the business matures, if they are looking to raise a bond, or do a sell-side advisory. I think the investment banking solution that we bring and that team and experience, it's really competitive value add. So
okay,
yeah,
perfect.
We will sit pretty within that space.
Perfect. Thank you very much, Tola. So as I mentioned, we're getting near the end of this session. I would like to thank, of course, each of the panelists. Before we end this conversation, of course, I'm going to ask for a conclusion word from each of you. And remember, in my introduction, I basically asked a question whether we have now enough evidence of the region progression from a frontier market to a growing emerging real estate markets. So maybe I'm going to ask each of the panelists, starting with Ram, maybe if you agree with this sentence, and why not, or why yes. Ram.
Yeah. I think we have more than enough evidence to move it to emerging real estate market. Although, to be very frank with you, the term frontier and emerging is not one that I adhere to or I enjoy particularly, because a lot of connotations go with it. But in terms of its evolution, it's definitely went from a market that was less well known, less transparent, less attractive to outsiders, to something that has become more attractive and more interesting and more transparent. There's still a fair amount of work to be done, but as you have a little bit of the focus of people on the micro rather than the macro, and the dynamics of each country separately rather than saying Francophone Africa as a region and sort of like assimilate it as one place. You do get the feeling that it is evolved and it is sophisticated. Customers are sophisticated. And the suppliers are getting better and better. And you definitely on a very positive path.
Excellent. Jeffrey, your thoughts?
So I think I would agree with all those points. Our direct experience in Abidjan has been that it's of all the projects we've built to date, it was probably the smoothest and the most understandable to push through the process. There were less curveballs that came at us, and we're very pleased with Abidjan. As I say, we've got 500,000 square meters just outside the city, and it's progressed really well. And we're hence, as a result of that, we're making another big investment and tripling the size of the actual initial project. Other markets, I mean, as a whole, Francophone Africa, I think, is making good progress. You're seeing strong GDP growth across the continent, but specifically in places like Senegal and Cote d'Ivoire are really strong economies. And I think the trajectory is very positive. So we're very bullish for investing more, building more projects across Francophone Africa, and think the opportunity is there. I suppose the last point is I don't speak French. My colleagues on the ground speak French, but that actually hasn't been a hindrance. And the reality is it's been easier than one would have imagined. As a Scotsman going into Francophone Africa has been simpler than one would have imagined. And from a government perspective, we've had great access to all the sort of key government officials we need to explain what we're doing. And the reception's always been very welcome.
Excellent. Tola, your call. As a Nigerian, I would assume that you would say that Nigeria may be hotter than Francophone Africa, but I would love to hear your thoughts.
No, to be frank, I mean, I'm not country specific. One support growth on the continent, right? But I think, I did two things this year. So I commenced French classes. So we can't speak French yet, but hey, I commenced French classes.
Sounds great.
And, I think that's just to show where one thinks, the growth will be, and that's why I decided to do that personally. I also I haven't traveled outside the country this year yet, but I've traveled once, and that was to Côte d'Ivoire, to Abidjan, so which also demonstrates, what one is expecting to see and evolve within that market. I do think there are opportunities there, and it's a matter of time. So what we've seen is the initial funds that were focused on Africa, went to other markets. But I do think that, with the next round of funds flow, capital flows, and new developments, they will definitely be seen more. And we started to see it, and not just locally. There are interesting European family funds offices, what Casada has done to recently. So I do expect that we'll begin to see more within that space. I think the continental free trade, which the ECOWAS or the Africa, what that also does, would open up, and as we evolve, just create fluidity, economic and resources moving across. And when we're talking about Francophone and Anglophone, it will be really one continent, driving commerce.
Thank you. Taslim, as sponsor of the event, I think you have the last word.
You'll have the last word, because I'm very curious to hear your thoughts. I think the fact that we have, my three co-panelists, I think, are a representation of the maturing nature of the market. Because, if you have players of that caliber that are starting to play in the space, that tells you something. So I won't repeat what was said, but I'll challenge a bit of the finance side of things, because that's, to me, is going to be one of the clear indicators of markets maturing. I think you're seeing more able players with deep equity resources coming in, but the debt side is not yet aligned with the nature of real estate. I think there has to be mechanisms that are created that are more adapted to the local realities, that are more fine-tuned with the nature of real estate, which is a long-term nature. I mean, if you look at simple structure in more mature markets like the US, which I know best, where you have, if you're looking at developing a real estate asset, you'll probably structure it in two parts. Your debt, you'll have the construction part, and then you have the perm part, which is going to be using the rental revenue in order to service the debt. We still have issues of maturity and costs for the debt side of businesses, and I think we haven't completely managed to connect with the global capital markets to bring those things down and align them better. You talked about earlier the fact that we're getting into securitization that allows to add more liquidity and add more maturity to the debt markets, but we're still at the very early stage of those things. And I think as that mature, then we can start seeing us getting into that space where we're more aligned with what's being done outside in the world. But it's very encouraging. The trajectory are outstanding. I think you have more and more able players, knowledgeable players that are getting into the space, that are pushing the local guys to raise their game, and that are driving interest from outside investors as well. So about the trajectory, and we're very bullish as well about where the next few years, where we're going.
Yeah, I fully agree, Taslim. And one thing I wanted to add before giving back the to API is that what we're seeing, what I find interesting is that over a decade, we've seen a market which has been developed from greenfield to brownfield. Basically, we're starting to get some kind of secondary real estate market. Casada is an example, Grit with the acquisition of Cape Scaring. So I think these are evidence that the market is maturing, going in the right direction, I think, for institutional players. Kafir, it's all yours.
Thank you, Ivan. And thank you to the panel. Taslim, we'll see you shortly again. But yeah, thank you to everyone of the panel. I think it was really well-rounded discussions, covering the different sectors and really looking at the, both the funding and the more practical data sides as well. So thank you, everyone. We'll now move on to the residential and affordable housing section. We'll have a 5-minute break, so I'll just ask the current panelists to switch off or disconnect, and then we will begin shortly with the affordable housing and residential session. Thank you.
Hello?
Hello?
Yes, hello, this is Jonathan. Hello? Hello, this is Jonathan.
Hi, Jonathan. Yes, we can hear you. We are just waiting for the other panelists to join.
Oh, excellent.
Fantastic. Can you see me as well, Jonathan?
I cannot see any faces yet.
Oh, I see. Okay, so maybe it's not my side.
Okay,
I just have to...
Hi, may I ask the panel to switch on their video, please?
Can you see my video?
I see it. Oh,
yes, hi, Andrew.
Hi, Kofi, how are you? Hi, Jonathan, how are you?
Good. Hello, Andrew, how are you?
I'm great. I always worry about technology. Sometimes it doesn't work when you want it to work. Today, touch wood, it's been a good day.
Good.
Great. Perfect. So we can get started with the second part of our Francophone Africa sessions, when the rest of the panel joins, we will continue. But Andrew, I'm going to hand over to you. Andrew Chimbonda is the CEO of Shelter Afrique and the AUF chairman. He'll be moderating the session focused on affordable housing and the residential section. So we've got a great panel, which Andrew will shortly introduce, and will obviously give an intro to some of their projects in the region. And then we can carry on with the sessions, go through the presentations, and we look forward to a very robust discussion in what's a very topical, obviously a very topical sector, both on the continent but also in Francophone Africa. So Andrew, I'll hand over to you.
Thanks, Kafir. You can hear me clearly?
Yes, we can hear you. We can hear you loud and clear.
Fantastic. Okay. Bon après-midi. Je m'appelle Andrew Chimponda, Directeur Général pour Shelter Afrique. Je suis très contente pour votre attendance, for my panelists. That's how far my French will go. So I will start by maybe introducing the esteemed panelists that we have today. So, ladies and gentlemen, today you're in for a treat. Jonathan is responsible for Jobomax construction operations and the sales team. He has over 25 ans, which means 25 years of experience in construction and construction services industry. Immediately prior to AHWA, he served as Executive Vice President for Textura Group, a corporation, a publicly listed construction technology firm. He has also held roles including planning, design engineer, risk management, and construction project manager. He's a licensed professional civil engineer and has participated in planning, design, and construction of projects valued from $500,000 to $3 billion. He's a graduate from University of Notre Dame, and of course, he has his MBA from INSEAD. Jonathan, welcome, and we're really looking forward to an exciting presentation from yourself. And then our next panelist, now you've got your glasses on. Is it Taslim? So, is it Taslim? Can I pronounce it right? Taslim Ngom.
That's right. Taslim, but Taz is fine.
Taslim sounds much better. Your voice sounds very authoritative, like you're in control of whatever projects you're managing. So Taslim is an executive specialized in identifying, optimizing, and realizing value chain opportunities through finance, strategy, and operations functions. He advised and delivered projects for the global industry leaders and organizations as a Deloitte consultant, then worked in finance at Google before returning to Africa to help run his construction and real estate family business, Sertam. In fact, I saw you do some interesting presentations, Taslim. Thank you. Taslim holds a BBA in Computer Information Systems from Georgia University, Georgia State University, Robinson College of Business, an MBA in Strategy and Decision Sciences from Duke University, Fuqua School of Business, and is currently completing the Advanced Management Development Program in Real Estate at Harvard Graduate School of Design. I want to stress this, ladies and gentlemen, Harvard Graduate School of Design. So some interesting Harvard innovations should be coming through from yourself, Taslim. Thank you very much. We were waiting for Dennis Papa from IFC. I take it, guys, this is just us today. Maybe just, if you allow me just to introduce myself. I am the Chief Executive of Shelter Afrique. Shelter Afrique operates in 44 countries in Africa. We have 44 member states in Africa, the African Development Bank and Africa Reinsurance Corporation, which makes the 46 members. We have funding from all global international DFIs. Our focus is on providing decent and affordable homes for people in the low-cost side. So we really deliver financing through lines of credit to tier 1, tier 2 banks, or provide development or project finance through public-private partnerships that either we create with government or directly to developers or contractors that have got scale. And of course, they've got a proven track record of developing 1,000 units and above. So we operate in the Francophone region and also the Anglophone regions. So for those listening in, looking for funding for exciting projects in housing, they have to be low cost, high volume. I'm more than willing through API, and we thank API for this opportunity to be able to have follow-up discussions of inquiries to be able to do the funding. So I think, gentlemen, now that we've done what we needed to do, I wanted to just maybe start off and ask who wants to go first between yourself, Taslim and Jonathan, so that we can we can start. Okay, maybe Yusuf is just to explain to the panelists that Yusuf could not make it because unfortunately he fell ill. You know, during these COVID times, falling ill is a big deal. So we are praying for him, mashallah, that he will recover from that. So maybe, you know, so since you are also co-sponsors, maybe Taslim, I'll start with you by just asking you perhaps how, in your view as CEO of certain real estate, how do you enhance innovation in the real estate industry? And if you have a presentation, you can take us through it. And maybe how can developers enhance their capacities to deliver at scale, considering the existing deficit, which in our Center of Excellence in housing is 56 million units in Africa. That's about $3 trillion needed to close the gap at an average of 25,000 US dollars a house. I know it's above that in many Francophone countries and slightly below in some Anglophone countries. So Taslim, I just hand over to you, and we are really looking forward to a very exciting debate. I must add that even my daughter is listening in the presentation, so she's very special to me, so I'm looking forward. So over to you, Taslim. Thank you.
Thank you, Andrew. Thank you, sir. No pressure whatsoever. Thank you to API for the opportunity to have this conversation. Well, from our perspective, if you look at real estate and you know how it all comes about, you know, it's, I like to use simple terms. It's pretty much building the space in which we live, right? So first of all, we need to start from a basis of where is it that we're going to build, and it has to you know, go into an overall vision that makes sense, that articulates into, you know, being a development force for our countries, right? So if I look at innovation, I'll look at a few different point of views, but all of them all revolve around the final users. You know, it has to be customer centric, if you will. So how products and services in the real estate sector are designed and built, I think, is the first area where there's room for innovation. I mean, I think we all saw the recent World Economic Forum report on the future of cities and how they need to be, you know, livable, sustainable, resilient, and affordable. Because truth be told, that last part, I mean, in our markets in particular, if you look at the pyramid, most of our of the local indigenous body of users and customers are, you know, towards the mid and lower end. Obviously, we want to create cities that lift all of that, but that's where we're at today. So affordable is really, really extremely important and community oriented as well. So I'll just use one example of potential innovation in how we design and build real estate products. If you look at Senegal, for instance, a lot of the workers in the houses, they live outside the city, but they come in the city during the week to go to work. What do? They end up renting a room in a house. Can products, for instance, be designed the likes of WeLive or something that's more adapted to our local markets to be able to address that need for that potential customer, right? And then to complement that need during the week, you know, can we build communities, you know, closer to home, because now infrastructure is being developed in our countries that facilitate transportation between, you know, the downtown area or the main urban areas and the outside areas. Can we develop programs, community programs that are affordable and well suited to the proper development of those communities? So those are kind of innovations that we need to start thinking about in how we design, what kind of product we put out there. The second, because when you talk about that, you know, the building block, like I said, is land. In our countries, the biggest owner of real estate or property is the government. You know, paradoxically, for markets like us, they're also the biggest renters, but that's another conversation. So they're the biggest owners of property. Can we work in partnership with them to make plots of land that is available for us developers to come and add value to it? But not just plot of land, because that's the building block, the first building block in our cost structure. but the primary infrastructure as well. Can we work with the government to have that taken care of so that we can come, at the last layer, remove some of the burden of taxes, so that we have an affordable product that the many can get access to. So those are the kind of innovation in public-private partnerships that we can do as well. That put aside, you get into financing. Financing is a space where we need a lot of innovation because if you look at the affordable market that we're trying to address, more likely than not, those folks belong to the informal sector. Their revenue stream are not, very consistent or formal. And if you start applying, the criteria that banks want to apply in order to finance folks, not a lot of them will qualify, right? Hey, can we think about more adapted financing mechanisms that, take into account those realities? Because at the end of the day, those folks, they still pay rent today. Mm-hmm. Can that rent be transformed to go into a mortgage that's going to allow them to get access to property? I think finance need to be, we need to look at, how we innovate in the finance space, how we connect better to the global capital markets, in order to make, financing, more affordable so that folk can actually get to the product. And last but not least, it's just, and I just said it in the previous panel, our markets need more transparency. So can we develop market intelligence platforms that allow us to better understand the dynamics of what's going on? That brings, removes all information asymmetry, so that international investors can come in, like someone from the diaspora that wants to get access to a certain area has more clarity into what they're getting into, etc. So that all contributes to making, our markets more affordable to the many that are trying to get access to it. So I'll just stop there. We have a bunch of ideas that we can get into, but those are some of the main ideas that we had in terms of innovation. Should I wait for the next question, because it's also long? Because your second question was to say, how do you actually make that happen, right?
It was what I can do. Then maybe Teslim, I can come back to you.
Yes.
Just to allow you to gather your thoughts, and welcome Dennis in a very colorful shirt, Papa Odeni. Kwanzaa. I thought you'd be wearing a green shirt since you are representing the green building lead. I'm sure your shirt is made of plants and flowers, but it's all good. From the International Finance Corporation, where he leads the IFC Green Building Market Transformation Program across West Africa and serves as support for Africa sub-region. He works with IFC's global partners in green building certification and responsible for identifying early-age adopters amongst commercial and residential developers, financial institutions, industry organizations, and other stakeholders. Papa Odeni works with national and local governments to ensure age is integrated into incentives and policy planning, and to assist governments create green building codes on national and local level. He holds an MSc in Urban Policy and Development from the London School of Economics and Political Science in the UK, and is an undergraduate degree in Land Economy from Kwame Nkrumah University, Science of Technology of Ghana. He's also a member of the Ghana Institute of Surveyors. So I think my expectation, Dennis, when we come to you, is you need to speak with that British accent, because you've been educated in London, right? And you've been educated in London. You need to show us that you actually transformed properly. So, I'll come back to you, Teslim. I'll just swing over to Jonathan, just to get a sense from Jonathan, who's the CEO of American Builders of West Africa, which are real estate developers. Jonathan, can you also talk to us a bit about how can diaspora funding or remittances be further utilized and structured so it can support the infrastructure drive in Africa, and more specifically housing? And then we can circle back to Dennis and Teslim. So over to you. The floor is yours, Jonathan. Thank you.
Well, thanks, Andrew. That was probably about the most lively interaction I've ever had in my career. So I appreciate the positive energy. And just to clarify one point, you introduced us as a developer. We really think of ourselves as a home builder, and the difference may be a little bit subtle, but to us it's really important. A home builder is part developer, part builder. In our case, we're part provider of consumer financing. We're very much a training and development company, but we are very much a sales and marketing company. And so to us, the secret sauce of being a successful home builder in the region is to focus on your customers and continuously develop your teams. And when I say focus on the customers, I see so many people in the region who think of buyers, and they use a word offtake, and you heard Taz use it in the first presentation talking about commercial development. Well, I will tell you, we do not think of home buyers as offtake. We think of them as human beings and families with hopes and dreams. And that I think that we certainly want to hit the kind of scale that you're talking about, Andrew, we want to do it one family at a time, because that is kind of the mission. And I think that's how you solve so many of the problems, by really focusing on the people. You're just wanted to start out whenever I get introduced as a developer, I kind of think, well, development is about 10% of what we do, and choosing the right land and all those things, but the other 90% is really important. So the question about diaspora and remittances is so important in the region. And if you think about the volume of remittances that happens, it dwarfs a lot of the other foreign direct investment and aid that comes into a lot of countries. It's not well tracked, and it's difficult to get the statistics on it, but we know they are gigantic numbers. The vast majority of that goes to consumption. And when you think about the diaspora and you think about affordable housing in particular, virtually every diasporan, and I know because I've spoken to thousands of them, have a dream of owning something back home. And there is a strong psychological and emotional link to home. And that is largely thought of as owning a home. And when you think about the typical way in which that's done, that home may be for vacation, it may be for retirement, it may be for family members who they want to provide some of the, all the hard work they're doing in France or the UK or wherever they're living. They want to share that with their families and give them that dream of owning their own home too. The typical way in which that's done is to find a friend or a family member and start sending them money and saying, can you buy some land? Well, we all know that the challenges of land title and how fraught that process is. And then to build a home essentially one brick at a time. And Taz mentioned the challenge of financing, and I think of very much the consumer financing part. So Andrew, you talked about Shelter Afrique providing the banks with long-term consumer financing, and then the developers with project financing. And I know that there's always a need for more project financing, but it really is not the bottleneck in affordable housing. The bottleneck in affordable housing is the long-term consumer finance. But when we go back to the diaspora, this typical process of sending money to friends and relatives to build homes almost inevitably ends in tears. And I think that there are ways to formalize that process, and we've been doing it for over 7 years, that turn that from tears of sorrow to tears of joy. And I can tell you many stories about people I've seen just break down when they see their house and scream things like, I never thought it was possible. Because they know so many people who failed. But I think as you talked about, and that money goes into consumption, it's stolen, it breaks up families when people are so upset about it. So these issues are really emotional. But as you mentioned, there is such a huge quantity of money coming into Africa from the OECD countries, and harnessing that into investment and not just into consumption, I think is a great path, not just to solve affordable housing, but to build economies more effectively. And when you do that, you do a couple of things. You eliminate a lot of those crazy transfer costs, 10, 15, 20% people pay. It turns hard-earned money into assets as opposed to consumption. And what we've seen with a lot of the diaspora, we have a diaspora side of our business and a local side of our business, but with a lot of the diaspora, when they make this successful investment, it leads to more investments. And whether that's starting an NGO or starting a farming project or investing in small businesses, when they see that they've made a successful investment in something in Africa, they are emboldened to invest more because they look at this formal process and they say, wow, this works. I can do this too. And that catalyst is really important to I think, not just developing affordable housing, but developing the regional economy. The last point I'll kind of make about this is that I think the DFIs can play a huge role in taking this model of formalizing the construction of affordable housing and formalizing that diaspora remittance flow into investment. And they can put a multiplier on that of 5 and 10 factor of 10 by putting their capital into the organizations that understand how to do this. And I'm going to point particularly, and Andrew, you talked about bank financing, about non-bank financing too, and organizations like U.S. Africa Housing Finance, which channel investment into the diaspora to help the financing on that side, but really want to do it on the local basis too for local buyers. And that's small potatoes compared to what the impact the DFI can have. What they've done, had an incredible impact, channeling millions of dollars of investment into Africa. But I think if the DFIs really got on board with that model, and the developers, I just said it, the home builders develop those skills to do the underwriting and to really understand how to manage that financing, maybe not for the long term, but at least to get it going, then I think that the impact that DFIs, impact funds, and others can have is gigantic. And I think that's where so much of the scale of the market can come from, because that, offtake that we talk about, which I think of as families, requires a lot of things to make the magic happen. They require quality construction, of course. They require somebody they can trust on the other end of that transaction who's not going to steal their money. And they require a mechanism that Taz is talking about that understands their lives, that can help them kind of, spread this huge purchase out over a long period of time. And I really think that in a lot of cases, the banks in West Africa, some of them do an okay job of it. But when you look around, most of them are really not very invested in that market for a lot of reasons. And they worry about quality. They worry about payment. They worry about the collateral. I think in a lot of cases, some of the non-bank institutions can be much better placed to manage that process. And I think what they need to be successful is some of that DFI capital that Taz was talking about. And then the last point I'll talk about is governments, and Taz talked about smart regulation, smart taxation, and that kind of thing. And I'll just ask this question in affordable housing, and this wasn't about diaspora finance, but it has to do with it, is how many, and Andrew, you talk about the public-private partnerships as well, that Shelter F-REIT does. How many countries in the OECD put 18% VAT on housing? There's not a lot of those out there. And there's a good reason for that, because it's really not an appropriate use of value-added tax. And what you do as a government when you do that is you've just told everyone, do not do this formally. They're telling every resident that building formally is a mistake. And I think that's exactly contrary to what governments want. And so when you think, and that is just one example of it. I'm sure Taz and I could sit here and tick off 100 things that we think about with smart regulation, and that shouldn't have to be something that's available. We went through the process, for example, in Guinea of getting that tax exemption, that agreement and public-private partnership with the government, a 4-year process, more than 4 years. And I don't know why every formal developer doesn't have that available to them. Every formal home builder who wants to come in and help in this space. So I'm sorry, Andrew, I went off and answered questions you didn't ask, but thanks for the opportunity.
No, it's okay. Thanks, Jonathan. You're very passionate. I could feel your passion when you kept on saying we can't use the term developer. We need to use home builder. So I'd like to know, in some of your home developments, what is the lowest cost of a house, just out of interest, that you've been able to build?
Yeah, so we've sold $25,000 houses, and our goal. I was just in Sierra Leone last week, and we were looking with a partner there, and we believe we have a plan that can get us down to that $10,000 price point. As Taz mentioned, a lot of that is in the land. I mean, a lot of places I can't get a piece of land for $10,000 or $100,000. So we do need the government to step in there. And as far as building construction, the key is not the technology, but it's getting the technology that people want. So It's easy to build a $5,000 or $10,000 house. It's hard to build one that people want.
Exactly. Okay, no, that's fine. Well, I think I'm just excited about the discussion we're having. For me, everyone's talking, Tess, yourself. I'm also looking for funding partners. So I'm excited about the discussions we're having. I have to be honest. Dennis, I'm not so sure if those are Masai behind you there, that painting, which I'm sure you drew yourself to be able to save on the green stuff. But can you tell us a little bit, because people may not know about age. So tell us a bit about age certification, how it enhances sustainability in housing, in the built environmental sectors broadly. Because I think one of the issues people have with trying to be green compliant is that it adds additional cost. But once you start getting used to it, you're able to manage that. Of course, it will reduce the, let's call it the utility bills by maybe 20% if it's done properly, etc. So we're very excited about, what you have to say. So, we're saving you for something that must be inspirational, because you sort of came last. So Dennis, over to you, and then we'll move to Taz. There's a piece of that Taz wanted to talk about. Please proceed, Dennis. Dennis, you can hear me? Hello, Dennis. All right, I think Dennis is having a green problem. He's frozen. So, so Dennis, once Dennis comes through, because he's not representing IFC very well, they're supposed to have like the highest technology looking at their balance sheet. But today, Dennis is just an ordinary African. Let's move on.
He's back. I think he's
back.
Dennis,
we're just saying how good you are. You look, when you're on screen. Can you then proceed, Dennis? All right, Chaz. I think IFC are underpaying Dennis. I mean, look at the kind of bandwidth he's paying for at his house. So Chaz, without any further delay, there's a piece that you were not able to finish. I would suggest maybe you step in now to talk to us about, I think we were talking about innovation in the real estate, and you wanted to talk to us a bit about the type of products. You have some exciting things to say that can help enhance, the capacity to deliver at scale. I mean, that's such an important thing, delivery at scale, because of the big shortage of housing. So I know, Tess, I'll just hand over to you so that you can, take your time. We do have 45 minutes, maybe 40 minutes left. So between yourself and, Jonathan, we're going to fill up that space. So over to you, sir.
Yeah. Thank you. Thank you, Andrew. I mean, pretty much Jonathan said what I was about to say earlier. I mean, it's one thing is through PPP, and we just discussed that. So I'm not going to come back to that, and how you actually lower your cost structure so that there's added incentive for the home builders. Thank you for that clarification, to actually have the capacity, because more cash available is more capacity to do more, right? So if you lower that cost basis, it helps you already. But Jonathan said something very interesting, and I had never thought about it that way, because my second part of my answer was going to be, you have to get to a place where you've industrialized the process of creating those homes, so that you can be, again, that plays your cost and being as efficient as possible and giving it in a as timely manner as possible. But he's absolutely right in the sense that you talked about us local Africans. We have certain preconceived notion as to what the solidity of a house should be and what materials should be in that house for that to be good for us. So I think, and I'm thinking just on top of my head right now, there has necessarily to be some sort of learning process whereby we actually make people comfortable with new technologies that might exist that allow us to produce houses faster. I had never thought about it that way before. It's very interesting, but industrialization of the process of industrialization of home building is something that gets us there. I like this. You talked about the institution where I was getting educated about real estate earlier, and they need to update that bio, because that was like 2 years ago. But one of the things that I liked is we used an example of a Mexican company that got very good at two things. One is industrial production of houses, and second is the process of acquiring future homeowners and their family. They actually capture them a bit everywhere in the country, and by the time they get them to the site and people visit something they like, if they come back and they say we want to do it, they can get their keys, right? So they've industrialized both of those processes, right? There's a financing link in that, because most of those folks belong to the formal sector, and the government had put in place a fund whereby there was a bit of a contribution from everyone that was in the formal sector that was contributing to that fund, right? And if you come, you automatically pre-qualify for that if you find a home that you like. So as they were acquiring future homeowners, they already had funding that was in place to fund them, and they were already in the process of building the home, so that by the time someone says I like this, it will be available to them. So I think the combination of these three things is very important. But I want to come back to something that's, again, communities. Really what we're talking about here is we cannot talk about projects individually. We have to talk about communities and how they link to the rest of the cities, because people, they come to live their homes, but they go to work someplace, right? They go to do their shopping someplace. They go to have their entertainment someplace. Can we develop like community programs that include all those other functions that allow people to have lower costs of living their best life, if you will? And that has to go through working with the public sector, municipalities. We have to give capacity to municipalities in Africa going to be able to develop those things, and going from there all the way up to the central government. We really need to think about this holistically, because that's how we solve for those issues. But again, I couldn't say it better than Jonathan said it earlier in terms of some of the things that need to be said, to be done, and it's all about lowering the costs at the end of the day for the final users, and at the end of the day giving them the basis for them to live their best life, and all of that while building trust over time. That's something that I remember you told me the first time we met, Jonathan, and that still holds true to this day. Once you develop that trust relationship, the sky's the limit. We can really solve for those equations over there.
Yeah, Tess, I have to say, sorry, I don't know if you can hear me. There's a bit of feedback. Can you hear me, Tess?
Yes.
Okay, fantastic. Yes, Jonathan, it seems like you covered quite a bit of what Tess wanted to cover, but I have to say that this issue of let's lower the cost of buildings, the cost of homes to about 10,000 to 25, all of that really excites. I'm not talking from a shelter freak, perspective, and we would like to see, what part we can play. Tess, you talked about industrialization. Now that becomes very important, and I think one of the things we want to do as Shelter Africa is actually to talk to governments to ensure that they provide an enabling environment to allow industrialization, because you may need to import stuff duty-free because it's for low-cost housing. I think we can, jointly play a role in assisting in that, because, we have land across 44 countries, which requires partners like yourselves to see how best we can work using Shelter Africa to negotiate the land. Then we can do the top structure. You've got innovations that are new to Africa, like maybe aerated autoclave concrete. But if you go outside of Africa, it's been in existence for maybe 90 years. You've got now 3D digital printing. Of course, it can go up different stories, but for single story on a flat foundation, you have 14 trees, you have 3D printing that's taking place where you can make a house within 12 hours. So, and then of course, stainless steel frames and what have you. But I think the most important thing is now with these affordable homes, how do we make them green? How does IFC enhance the greenness so that the end beneficiary can benefit from a greenhouse? I don't know, maybe Dennis, we're saying a lot of good things about you and your institution, IFC, and how they're looking after you so well. And we just wanted you to give us a sense around how IFCH certification enhances sustainability in the houses or homes that are built in the sectors broadly. Maybe you want to give us an output of that. Thank you.
All right. So sorry, I'm having very terrible connection, but I am able to hear the questions and the discussions going on. It just happened you were not able to hear me when I spoke. Yeah, but yes, the EDGE program is basically not only about green building certification. That is not the only thing we are interested in. It is an entire market transformation program that is looking at working with all the various stakeholders within the built environment to tackle the issue of sustainability. So we work with governments, we work with the developers directly, and we also work with financial institutions. We provide funding for financial institutions to then on-lend to developers, or we provide funding directly to developers that are willing and interested to build green. And the other thing we also do is with government.
Dennis, you said you provide funding to developers that want to build green. So because you're trying to encourage them to build green, your funding, you said what sort of just broad range in terms of cost? Is there a difference between green funding that you're providing to developers to encourage them to go green? Then you can maybe continue with your explanation. Thanks.
Yeah, so we do have differentiated products that is able to help bring the cost of financing lower. Okay, so and then also in our work with government, what we mainly want to achieve is to help government come up with these developers that will go green, right? So can we support these government to come up with some policies that would offer some additional incentives to developers to be able to go green, right? Can the government come up with incentives that would allow financial institutions to want to on-lend to developers that want to? So this is the sort of work that the EDGE program seeks to do. Now, the certification bit is the aspect where we enable real estate developers to brand themselves as green. They're able to take advantage of the EDGE program to market directly, learn, and then see how they can make their project be green. Because one question we get asked a lot is a developer is an affordable housing project, luxury project. They are interested in making it green, but how much is it going to cost me to make it green? Because the notion is that building green is expensive. And that is only because we always see the very sophisticated and very expensive buildings that have been certified green. Hardly will you see an affordable housing project that has been green, right? So EDGE is changing that narrative. And we do have a lot of examples across Africa, not outside Africa, but then within our jurisdiction of affordable housing projects that have been certified green. In fact, in South Africa, we were able to get a social housing project to be built green. Now, how are we able to do this? The program comes with a software which is free and accessible. And what it does is it gives you a bouquet of options across the various categories, energy, water, and materials. And for each measure, you are able to see exactly how much it's going to cost you to incorporate that particular measure in your project. So you have the option of choosing the most cost-effective option, right? It will take you to recoup that particular investment. Investment tool or a financial tool for the developer to be able to make his own appraisal of going green. You then have to, you would then be going green not because IFC is advising or is asking you to go green or because it's now fashionable to go green, but you go green because you are seeing. And then also, one other thing that we've also done that we think is really helping us, we have limited the various categories because in other certification programs, 12 standards that you need to meet. This makes it expensive to go green. However, important sustainability criteria, which is energy efficiency, water efficiency, and then the type of materials being used. Now, these three makes it very achievable, and developers are then able to really see the benefit for them in their projects.
I have to say, Dennis, I think it's interesting. You're breaking up just a little bit, but it's okay. It's expected, but at least we're picking up on that. Maybe you may need to provide API to send to all the prospective partners, maybe the forms or what they need to work on to be able to get accreditation for green funding, and also for just to make sure that we are supportive of the green initiative. Maybe before I ask Jonathan on something, there's a question that's come through from Robert Hornsby. I have to say this name is passionate about housing because I see his name on many panels that I operate from. So he says, we've all read about Shelter Fix work with African governments to encourage policies that support the enabling environment to create sustainable public-private partnerships for affordable housing development. And Jonathan spoke about the long process to get the right investment incentives in place for
I can now, yes. I left and came back. I do.
Yeah.
I do hear you, and I had to log out and log back in, and I'm wondering, I'm going to text Taz and suggest that he do the same. Now we've lost Andrew too. So Kafir, I guess we'll just we'll wait for a moment to see if they come back. I guess in the meantime, I can try to address the question Andrew was asking, and we'll let Taz pick it up. I think that the question indicates that we need a more unified way of giving investment promotion to people, to organizations and home builders like us who want to be engaged in building. Can you hear us now, Taz?
Yeah.
You have
you guys
audio?
hear me?
Yeah. I don't know if could you hear Andrew's question? He was asking to you.
I couldn't.
His question was basically, is there hope for a unified approach across the continent or across the region to give investment promotion to, the things that you were talking about, the public-private partnership, as opposed to each home builder or developer having to go and try to negotiate their own deal every single time? And
Right.
I think Andrew was asking that question to see if you had any insight into it.
There should be, right? But it feels like maybe we have a party that's missing around the table. I think every time we're having these conversations, I find it unfortunate that we're always missing someone from that part of the ecosystem that can start bringing some answers to those questions. Obviously, when you participate or are in conversations, that's always what people say, and you have also the DFIs as well that are trying to create common infrastructures across the different countries. But for now, I'm not seeing any traction towards that. But again, I'm not in the best position to do that. I'm in the private sector trying to get things done. We try to interact as much as possible, like I said earlier, with GFIs and public sector in order to help shape policies. But that's where we're at, just conversations. We know that there's plans at the local level. I'm not aware of any at the regional level yet.
Yeah, I think Andrew, Taz, and I are both going to turn that question back to you and ask if Shelter Afrique can engage with the regional organizations and the local governments to encourage that kind of thing. Because one thing we talk about all the time is our competition is people building their houses one block at a time. It's not other formal home builders or developers. We would love to see more people show up and do things more formally for lots of reasons. And there are so many obstacles to doing that if the region and the individual governments can work on that. And as Taz said, everybody talks a good game. If you go in and you talk to the Minister of Housing in just about any country in West Africa, they will tell you, we have all of these great programs for you. The reality is that you're going to go through a long and torturous process to implement any of those, and it'll be different in every country. So I think Taz is right. What we need is the governments to show up to these things too, and also multilateral bodies like Shelter Afrique to try and champion, and Central for Affordable Housing, the African Union for Housing Finance, to really try and champion these things at the supranational level.
All right. No, I think Jonathan's fine. Thanks for throwing the rugby ball at me, and I'm going to score the try right now. So I wanted to say, that the first thing I want to confirm: are you a member, Jonathan, of the African Union for Housing Finance? Because I thought you were. Are you a member?
We are. In fact, one of my colleagues ran for the board last time.
Ah, okay. I like that. I'll vote for him. And Tess, are you a member as well?
No, sir, not yet.
All right. So you know, I just wanted to say that there is, if you join after the course of this week, you know, I'm the chair, so we'll give you a 10% discount for your company if you join.
All right. All right.
if you join this week, and I'll tell the Secretariat, Kesha Rasta, to endorse that. But what I wanted to say is that I think the question being asked, it's yes, things take time with government, but I think it's about how we articulate the benefit for them. Now, the first and foremost thing is every housing minister on the planet needs to prove to his president or his country that they can deliver housing at scale. This is so important because the people that elect them into power, the biggest thing that they want is housing. And it's not something you can go to the public and lie about, oh, I've done 10,000, because they're going to ask you, show us where they are. So this is one of those industries where you can't, lip service is not going to get you to the finishing line. So what I wanted to maybe suggest to I think it was Robert Holmes, let me check. Yes, Robert, is that to the people listening, if they want to get hold of government and they want Shelter Africa to champion that, of course, we are more than happy to do so because we are owned by 44 African governments. In fact, on the 20th of June to the 25th of June in Yaoundé, we have our 40th annual general meeting and also the symposium, and also there's a day on the 21st where we have, you know, like all the finance ministers in one room and all the housing ministers of 44 African countries in one room. And I'm more than happy for those who are interested that we'll send them invites between today and tomorrow, so that I think it's those forums when you're having those discussions that if there's a particular country that you're interested in, you have access to the finance minister, access to the housing minister. If you want us to facilitate a PPP, we're more than happy to do it because it's really our core business. It's our mandate. We've tried some in various countries, and I think that's the only way sometimes you can achieve large-scale delivery of housing at a low cost. You know, affordability is relative. Somebody who can afford a house for 1 million is affordable to him compared to a house of 10,000 that Jonathan is working on is affordable to them. But what we are saying is 90% of the population can only afford those low-cost houses. That's why we try and push that. So I guess to Robert's side, it is something that takes time. I know he's a member of the Africa Union for Housing Finance. I think it's something which maybe we'll also take to the members and try to, you know, come up with a lobby group. I think it always works with, instead of having multiple incentives across the continent, the problem with Africa is not like the United States of America. You've got a different country with these different rules. So you've got 54 independent sovereign states as opposed to America. So you can't have one size fits all necessarily, but what you do is you have to choose a particular country, engage the particular housing ministry, etc., finance, etc., and come up with a package which has got the right incentives, then you roll it out. Then you can take that to another country because it's worked somewhere else, and then we move forward. So I know it's a bit of a long-winded one, but I think it's possible, but it requires a certain level of planning. Martin is asking about the reclassifying of affordable housing components into essential infrastructure. That is the house and green technology, the solar geysers. And now that's when our IFC guy goes, but he's talking about green. So the question is, these gremlins are really against us. But the question is, would it help in tapping current capital pool momentum from both DFIs and institutional impact investors? What is the panel's view? I think the question, I don't know if it was clear, but I'll repeat the question. He's saying, if we reclassify affordable housing components into essential infrastructure, so a home will be called essential infrastructure, and then the green technology will be the solar geysers. Will that help in tapping the current capital pool momentum with both DFIs and institutional investors? What is the panel's view? I was going to ask IFC, but anybody's free to answer the question. Yeah.
Okay, so I would make an attempt at answering that. I do not believe that we need to differentiate the two. I mean, most times people think green buildings cannot be same as affordable housing. We kind of classify it to be different from affordable, but the experiences that we've had with some of the developers that we've worked with across Africa shows that it is possible to have affordable and green at the same time. It all depends on how we can work together to make it possible. But it is stuff that we've done before. And then also on the second part of his question, usually, I mean, now globally, people are really looking at raising financing in a very innovative way. And green financing, this affordable housing to be green, is a way for you as a developer to be able to tap into these green fund Kenya that was able to do the green bond to help develop their student accommodation. Right. There are a lot of examples that are coming up. Currently in Ghana, the IFC is working with the Security and Exchange Commission to do the guidelines so they can be able to issue green bonds. So it is a very interesting area that is coming up, and developers can be able to tap into that. The only difference between green bonds and normal bond is the use of the proceeds. I mean, for a green bond, the proceeds needs to go towards projects that have been certified as green, right? So it is really, it's an opportunity that I would hope that a lot of other developers would want to look at and tap into.
Okay, so maybe just to support what you're saying, Dennis, I think Martin Schwarzberg, you're confirming to him that by reclassifying green technology, you can access the green capital bond part of the market. And I think what he's touching on is some DFIs fund infrastructure, and he wants to redefine house as essential infrastructure to get funding. And the answer is yes, it is possible. It's all about how you package it, because even for a house development, you need infrastructure to reach the project, be it roads, be it services, water, electricity, all those essential initiatives. I think we've answered Martin Schwarzberg's question. I think if there's anything, I don't see anything from Susan.
Andrew, sorry, could I just add something to Dennis's point about and also to the question about infrastructure too, is about green doesn't always have to be a cost. It can sometimes be a cost saver. And one of the things that we've really worked hard to do is to manage stormwater runoff in our courtyards. So, we're building single family and semi-detached houses. We're not building high rises. But within that, there's a desire, or we have a strong desire, to not dump, as almost everybody does in West Africa, dump all their stormwater into the street. Because when you do that, you'll see these gigantic storm sewers that are built all over West Africa, 50 centimeter by 50 centimeter, 60 by 60. Lots of concrete goes into that. Lots of moss goes into that to prevent erosion of the streets. But if you can manage the storm runoff within the courtyard, and our goal for every house is to keep 90% of our stormwater inside the courtyard and infiltrate it, as opposed to dump it out into the street, then you can actually reduce the infrastructure cost by reducing the size. You can turn a 60-60 canal into a 20-20 canal. And when you do that, you have dramatically reduced the amount of concrete that goes into that, which is of course good because there's less cement, less CO2 in that. But you've also reduced the cost of the project. So I don't think that green and affordable are contradictory. You just have to be a little thoughtful about it. And on that topic, I will tell you, we are fighting culture like crazy. So I told you we want to always be aware and thoughtful about the culture and people's desires. At the same time, sometimes we have to lead them a little bit too. And I have customers who want their courtyards paved, and we just refuse. And we tell them, you need to go to somebody else then. And sometimes that's a really painful conversation. Or we'll have to develop really large catchments in the courtyard because there's so much paving that they want to do. But I do think that there are ways, if you're really thoughtful about it and keep trying, there's ways to actually reduce costs by putting in green features. And that also gets to the infrastructure question because it's reducing the cost of infrastructure.
I think, Jonathan, that's a very good response. And Taz, each time you come after Jonathan, he says what you want to say. So I'm not so sure right now.
Fine. I think he took care of the technical aspects. I wanted to go back to the whole thing about capital markets.
Sure.
I'm gonna be very blunt, right? There's a bunch of money that's out there, right? Right now, the challenge for us in Africa in general, be it to finance infrastructure or social housing or whatnot, is to be able to plug into that and attract some of that. And the whole thing around green, and again, I'm sorry, I'm going to be very blunt. Maybe we don't realize that money that's going into green, it actually offsets costs on somewhere else. I mean, there's this huge pressure from global forces now to say, you need to cut CO2 emissions, right? If you don't, there's going to be cost to that, right? And there's mechanisms that were created to offset that. So that's how you get into capital that doesn't cost that much. Because at the end of the day, if you want money to come here, money is going to be like, I don't want to get lost. So the investors are going to be like, I don't want to lose my money. So what guarantee are you going to give me that I'm not going to lose my money? And I want it to yield more money over a certain amount of time. And I don't want to be away from it for too long, right? As long as those three things are answered, an investor is willing to put their money, right? When it comes to infrastructure or social housing in particular, or affordable housing, which is what we're talking about, in order for that for that cost to come down, they say, we're going to offset our green obligations by giving you, zero interest rate zero interest rate loans, or we're gonna have you pay not to. I think someone needs to come in the middle, and for me, it's government, because I consider affordable housing as a social need, right? And in the government budget, there's things that are directed towards infrastructure, towards social needs, etc. I think education, healthcare, social housing should be one of those things. The government has to play that buffer role in the middle, so that by the time it gets to the private sector, the cost is lowered to its minimum. So the plugging into the capital market is very important, but the mechanisms that we put in between that and the local markets is very important as well. And that needs to be driven by DFIs, impact funds, and governments, so that by the time it gets to the ground, that capital costs zero. You can hold it for as long as possible, and the risk of non-regularity in the cash flows to cover for that debt is covered by a mechanism. So I just wanted to stress the fact that a big part of the affordability equation is financing, is that capital. It's what mechanisms are there. Like Jonathan said, it's not, the supply side of the things is always going to get financed as long as the demand side can get to the market. So how do you assure for long-term financing to the demand side? You need to create those buffers, and you need to plug into the global capital market, because that's where you have the most money, and that's where it costs the least. Locally, our banks, if they follow the local rules, we're never going to get there, because nobody's going to be able to afford a mortgage to get a home. So just wanted to stress that point.
Look, I think it was an important point, Thijs. Thank you very much. I think someone has asked a question at the AGM in Yaoundé, Cameroon, from the 20th to the 25th. How are they going to be able to get hold of some of the ministers? I can guarantee them that most of those ministers will all be staying at the Hilton. There's one Hilton only in Yaoundé. And if you want us to facilitate those meetings, I mean, this is a real story. I know what I'm really talking about. If you have a particular interest in a particular country, the thing about the ministers is when you catch them outside of the office, that whole bureaucracy stays in country. You'll be able to engage, have coffee, engage, and actually be able to set up the right type of networks. And that's how business is done. I wanted to say in terms of AUHF, the Secretariat Center for Affordable Housing Foundation sent me the brochure. Taz, are you a member? Because you need to be a member. They've just approved the 10% for June. Are you a member, Taz?
I'm working on it.
I know you. Every dollar counts. It's fine. So now that we're getting to the end, I'm going to be asking our esteemed panelists for maybe their closing remarks. If I understand correctly, we probably are closing in 5 minutes. Is that correct, Jonathan?
I believe that's right, but I think we'd have to ask Kafir.
So I will just ask you all for your closing remarks. I'll start with you, Jonathan, and then I will, of course, go to Dennis, and then Taz, you have the opportunity, to give us something very thought-provoking when we leave this panel to think about after we've closed today. so no pressure, Taz. So Jonathan, over to you.
Well, my goal right now is to think about every closing remark that Taz would like to make and make it first, so that he'll just stand there with his mouth agape. So Andrew, again, I just want to thank you. It's been a lively discussion. I really appreciate you taking the questions, and because I do think as somebody who attends these things, I enjoy getting my questions answered. So thank you for doing that, and thanks to API again for sponsoring this. We're in both Francophone and Anglophone markets, but I like to think of the markets we're in, Guinea and Sierra Leone, as emerging frontier markets. So they're hoping someday to become a frontier market. I think if you listen to Ivan at the beginning, he was talking about going from frontier to emerging. I think he's talking about Senegal and Cote d'Ivoire, not about the markets that we're in. Yes. But if you think about the whole region and the affordable housing question, as Taz said, the market is gigantic, and I think the comment he made is so important, that if the demand is there, then the financing for the supply will not be a problem. And I think that's just the way the capital markets in the world work. And I think that what's needed again from the DFIs and from the impact funds and everybody who's interested, and the governments, everyone who's interested in solving these problems, is to figure out how we can drive that demand. And the demand is not just, I want a house. The demand is, I want a house, and I've got a mechanism for paying for it over time. So I'm going to go back to something I said at the very beginning, and Taz just pointed it out, and I'm glad he said it instead of me, but we know that the local banks are just not generally supportive of mortgage lending. There are many reasons for that could take up an entire panel discussion with experts in banking, of which I am not one. But we do know that it's not something that's been historically, they've been supportive of. So I would encourage the DFIs to also think about non-bank entities and what they can do. So not just home builders like us and CERTEM, but others who are kind of playing in this space. And is there a space for non-bank lending? And if you think about the old idea of going to purchase and having installment purchases made on a television or anything else you might buy, the same can apply to housing. And Taz, is doing some rent-to-own modeling. So I just wanted to kind of call out to those with the capital that might be a way to think about things as opposed to the traditional kind of bank mortgage route.
I think those are very profound but interesting thoughts. Jonathan, completely aligned. I'm not worried about the pressure you've put on Taz now, because you really shouted it out, So Dennis, over to you. Sorry that you had a few connection problems. But can you maybe give us your closing remarks? I can definitely say we as Shelter Afrique are partnered with IFCH, and we are part of all the work you do, and we try to prioritize, developers, home builders that are green compliant because of the reduction in the carbon footprint and also the benefit to the beneficiary. But over to you, sir.
Yeah, so thanks a lot, and we are really happy about that partnership with Shelter Afrique. Because we believe that South Africa really is doing a great job across Africa in developing affordable housing, and working together with you to make sure these buildings these projects that you're going to see are going to be green is very, very important to us. What I want to leave away with is that we need to see green and affordable not to be mutually exclusive. The two really go hand in hand. And I think that developers, affordable housing developers should take advantage of the Edge platform, where you can get access to really see which measures qualify as green and is not going to be very difficult on your budget or on your funding. And then also it also should be a way of you getting your project to be truly affordable, because there isn't any essence in doing affordable housing where the end users have to use almost all their monthly income to pay utility bills, right? And that is one thing that green buildings tend to do, to make sure that the final project that is done have very, very minimized utility bill payments, right? So that is one thing that we think affordable housing developers should be looking at doing. And then also you should take advantage to get your project to be green, so you can get access to some of these innovative financing that is going on. I know it's very difficult accessing funding. One of the main problems that we have when it comes to finding affordable housing is getting access to these funds. But there are a lot of money out there that's looking for green projects.
Exactly. Okay. So that's an incentive. Dennis, thank you very much. Thank you very much, Dennis. And it was good to have you on, despite some of the glitches on the network. Taz, now you're the man of the moment. After you, we hand over to Kafir. So Jonathan laid it out. You got to do better than Jonathan. I'm sorry. So,
better than Jonathan and yourself. So here's my bold proposition, right? I think we should create a vehicle. If it's at the regional level, better, because it allows us to have a diversified profile of risk. A vehicle that's going to be owned by the government and has DFI involvement, and that goes and plugs into the capital markets to raise massive amounts of money, that will give close to 0% interest rate loans to able demand over a longer period of time. We create that vehicle, we give it capacity, right? And that vehicle, its job is to work, because the public sector itself is not going to be able to get it done. You know, that housing deficit that you talked about is going to be a combination of the public sector and the private sector. What the private sector needs to know is, how can I exit so that I can get to the next one, right? If we create that fund, the public sector can create vehicles that are going to be delivering homes. Ideally, they shouldn't do it because they're not the most efficient, but at least they guarantee, and I'm sorry, I'm gonna use the word, Jonathan, they guarantee an offtake or an exit to the private sector, right? So that fund or vehicle will guarantee an exit to developers that are, building houses that are of a certain criteria, or homes that are of a certain criteria, and communities better. It's better than homes, communities that are of a certain criteria. So that allows the private sector to churn. And on the public sector side, you have the guarantee of state or multiple states, and you have DFIs that come in there. I'm sure we can raise whatever amount you mentioned earlier, which was humongous. We can raise that at that fund level, and allow the developers to exit and allow the demand to be financed, so that we can finally get the pace of development we need in order to get this challenge taken care of. Green has to be a part of it. Again, communities, cities have to be a part of it. Infrastructure has to be a part of it. People need to be able to move around pretty easily. And at that level, if we think at that level and we mitigate the perceived risk of capital globally with that vehicle, I think we can get it done, we can get it done properly.
I have to say, you've really lived up to the expectation, Tez. A mentor of mine always told me, talk is cheap, money buys whiskey. He died of drinking whiskey anyway. So, I think I'm going to hand over to Kafir now, but just to say to the panelists, what an exciting opportunity I've enjoyed every single things we've discussed. I think, Tez, we may need to look at the conceptual framework of the last bit that you talked about, even if we as a group, the 3 to 4 of us, just look at it and say, can we develop it further, so that at least it can grow a bit of legs. But I like the concept, the thinking, and thanks to you, Taz, thanks to you, Jonathan, Dennis, thank you so much. Kafir, thank you for the opportunity from API. This was very thought-provoking and exciting. I hand over to you, sir.
Thank you, Andrew, and thanks again to the panel and to everyone who joined us. Taz, thanks again for helping us put this together. I think we really delved into some good topics across the commercial side and then really deep dive on the resi side. So I think there's some excellent discussions and really, also having or bringing the region, the Francophone region, to light. So thank you to all the panelists. Andrew, thank you for moderating. And we'll continue the discussions throughout the year, especially at the API Summit as well as the AUHF conference in November. I definitely believe that a lot of these discussions will be taken forward, and hopefully we can take some of these things offline and build on them as we build on the region and the market and the market development aspects. So thank you, everyone, and thanks again, Certain Group and Latitude 5 as well for helping us put this together. Thanks, everyone.
Thank you.
Thanks, Kafir. Thanks, guys.
Thanks all.
Have a blessed day.
Thank you, everyone.
Bye. Thank you. Bye.